Hey, so I'm here today with Mike Hamilton. Hello Mike, nice to meet you.
Hello Mark, very nice to meet you.
So, a few questions to ask you, some from people who are interested in what you're all about, other questions that people have sent in, and just general questions of people looking to get into trading. So,
Good, okay.
First off, let's start off with, can you tell me a bit about yourself?
Yeah, I've been trading for a long time, but way back in the beginning when I left school, I actually started working on the Lloyd's non-marine trading floor, i.e. the insurance market. So, in those days, it was all face-to-face, no computerisation. So, but whilst that wasn't trading stocks or currencies, it was nonetheless trading, face-to-face trading. So it just put me in the mindset of the idea that you could negotiate a price and you negotiate and you settle and so on. So, but quite quickly after that, I started trading my own account in stocks, and then went from there.
Okay, interesting. So, stop. That sounds interesting. So it was purely, you were getting a feel for supply and demand, and that gave you the confidence to go out and start your own account and kind of trade stocks.
Yeah, exactly. That put me in the mindset. And we're talking about early 80s,
right? Yeah.
The period when a lot of privatisation is going on. So I was already just getting a feel for how IPOs worked and jumping into IPOs.
Yeah.
And then developed into trading from there.
Okay, interesting. That's interesting. So that was how you got into trading. You kind of opened a stock account from there, did you? You were trading insurance, baskets of insurance products, and then you opened your own kind of personal account. Was that a long-term thing, or was it?
Yeah, the insurance was the day job.
Yeah.
And then the thing that made me really sort of start to trade was the fact that I was beginning to sort of, I was young, beginning to save for the future, my older age, and I was seeing these quite pathetic returns from these unit trusts. And I thought, this is crazy. They're taking all these fees out of my investments, not leaving me much growth. Yeah. And yet you could do an IPO, you could get involved in an IPO, or trade other stocks over a period of time. And I was seeing a way superior return very quickly, so it was a non-brainer.
Yeah. Okay. Any particular stocks you remember? Anything when you were trading?
Yeah, I was trading some house builders, some hotel companies, all the usual IPOs that are going on all the time.
Yeah.
I was even trying to front run these things. For example, I knew TSB were thinking about going private, so I opened a TSB account.
Yeah.
And these kinds of things.
Just thinking ahead of the game.
Yeah, it didn't always work. There was one or two IPOs that went south, but my profits were way in excess of my losses, so I was enjoying it and getting a real feel for trading at that stage.
Okay, yeah, good stuff, interesting. Question here is someone sent in, can you remember the first time you thought you nailed the trading business? I mean, you've been in it a long time now.
Yeah.
Was it 81 you say you started?
Well, 81 was when I first went into work.
Yeah. That's the first time you thought, I've got this?
Well, very early on, because in that sort of period when I started trading, the UK was just coming out of a very tough recession. Yeah. And stocks were really beginning to fly. You could literally, I had a very, very simple value strategy. I was almost sticking a pin in the FTSE 250, buying a stock, holding it for 3-6 months or whatever, and deciding just when enough was enough, taking profits. In those days, it was as simple as that. So in answer to your question, I thought I was trading well pretty early on.
Yeah. But then now you realise that it was the passive market.
Yeah.
But I guess you make hay while the sun shines.
Exactly. Yeah.
Yeah. Okay. The other question was how long did that feeling last? How long did it before you thought, actually, you know what, I haven't got it cracked. It's not as easy as it makes out. Was it a few years that was going on for? I mean, it was 80s before my time, so you have to put it into perspective. How long did that kind of?
Well, I got to a point in '87 where my fund was growing, and I looked at the stock market and I thought, this is a very, very rich, highly priced stock market. And I literally took 80% of my stocks off the table 2 hours before September 1987 US trade figures came out, and the rest is history. So, I felt pretty good about myself.
I
felt like an expert trader.
Yeah.
But the odd thing is about this that where it felt as if I was going wrong, let me hit the skids a bit, was quite early on in my technical analysis trading. You know, I'd gone from fundamental trading to technical trading.
Interesting.
And that was the point where I struggled, because all of a sudden I found myself trying to read the charts, trying to work this a technical strategy out, and I was getting into stocks or currencies too early. Maybe I was right at the time, but I was jumping in. I thought my technical skills were right, and they weren't good enough at the time, so I was getting into some stuff a little bit early. Some of the trades I was taking would work, but not with me in it.
Yeah, classic. Yeah.
So,
a bit early, a bit late, anything like that, so it's around sync, doesn't it?
So I had to step back and stop and really study more, do a lot more research.
Study the patterns and the analysis and a different approach to perhaps what you were doing before, is that?
Seek extra help.
Yeah.
I can't emphasise this enough. You wouldn't go to a lawyer or an accountant with a tough problem for your business or for your personal life unless they were, unless they were extremely qualified and they've gone through the mill. And yet there's so many traders who come into this market thinking that they can watch a few free YouTube videos, go on a couple of free courses, or may take some modest courses and jump into it. I mean, trading is a profession. It's about all sorts of aspects of trading, from the trade plan to the risk management to the psychology to the physical entry and exits. And to pull that together without sufficient training is...
you get out of your put in the day.
Exactly.
Treat it with respect and the business that it is, then you invest in education.
I think you use the word respect. You respect the market.
Yeah. You're playing against the best guys in the world at the end of the day. Right?
You little retail trader against Mr. Market. Yeah,
that's it.
So
okay,
fully equipped.
Interesting. Okay, the next question we've got here is: was there a time you felt like you failed in trading? So I guess this now we're transitioning to the...
Yeah, it was my early experience of using technical trading.
Yeah.
I came out of it, I did an extensive 2-day solid course. I got away, a little bit confused, so I did a lot of back reading. Thought I'd drawn up a trade plan that could work, and it wasn't good enough. And so I had to go back a few steps and literally test what I was doing and work at it until I was good enough to get back into the market.
Yeah, that's interesting actually. I think a lot of people come in, do a little bit of work, and then realise, because you're either right or you're wrong, it's either working for you or it's not. There's no sort of half measures, is there? You're on the positive or you're not. So, okay, another question I guess is under the similar guise to that, and in fact leading on quite nicely. So you came to that point where you realised you were struggling. The question is, what did you do to overcome the failures? I guess that leads on quite nicely. What did you actually do then? Did you do more research? Did you do more education? How did you get to the point where
I think the point is, you can have... there are different styles of trading out there. There are different ways of entering and exiting the market. I realised that I had to find one that suited my personality and suited me, suited my lifestyle, my work pattern, and if I was going to take a long-term view, I needed an entry and a stop that was going to fulfil that and not get too close, not get too anxious and try and take points too early. Or if I was further down the line day trading, equally I needed to adapt to that style of trading. But so it was stepping back and working out and finding and developing a trade plan that would work for me personally.
Yeah, I think that's a key point as well, isn't it? Everyone's different. Some people can make decisions quickly, some people like to analyse things. So is that the point then that, was that the biggest challenge you had to becoming consistently profitable, was fitting the strategy with what you were trying to achieve? Or?
Yeah, definitely. And it was about, I said to myself, at one stage I stopped and asked myself the question, how do these markets work? Yeah. How does a market reverse at that particular point? How does it pull back to that point? Where should a stop be? Physically, how does a market work?
Yeah.
And when I felt I answered that question, I was then able to move on and move on up and build an account.
Yeah, interesting you say that, isn't it? Because Once you understand really what the market's all about, then you can only then start to build the foundations of the profits. Or if you just dive straight in, then you can almost get lost in
But it was stopping and asking myself, what does the market do? How can somebody like me handle the market?
And how can you compete in a
competitive
environment?
When is the best time to trade? When is the time not to trade? When is the time to take profit? These are all questions. I think a lot of people spend a lot of time thinking about how to get in a trade, but they don't think about how to get out of a trade. And you ask a broker what the common problems are. One of the common problems that the brokers will immediately come back to you and say is that traders leave too much money on the table for too long, and they give it back. So, these are people do go into the market without having gone through this process. They don't realise it until too late, until they get the profits back and they struggle.
So you talk about the broker there. Was there anyone specifically who influenced you as a trader? I mean, I guess the broker didn't. Was there any trading mentor you had, or perhaps something you looked up to and were inspired by? Yeah,
several. I looked to and was mentored by traders in the UK and the US. One particular UK trader was a real veteran. He understood level 2 trading in stocks in a very, very detailed way. I learned a heck of a lot from him, from one aspect of trading, and I learned some core technical aspects from some US traders. But I was sitting in a webinar once, and a very highly respected young US trader said that this tool that he uses, he felt, was the code of trading.
Right, okay.
Now that's really resonated with me. That's what made me stop in my tracks. I've never heard anybody say that before. This man said that he used this tool as a code of trading. So I took that away, and actually that became the sort of crutch of my trading, ultimately.
Did you use that literally as he had described, or did you tweak it?
No, again, I developed it for me. The way in which I use the tool that he talked about is extremely good, the way he used it. That's why I liked it. But I used it in a way that suited the time frames I was using and the style of trading I was using. So I adapted it. But had I not sat in that webinar and heard him say that, I wouldn't have given it the emphasis that he forced me to commit to.
Well, that's interesting. So it sounds like at that point you had the strategy kind of nailed down, your approach nailed down. How important do you then think that psychology is in trading?
Psychology is the name of the game, and able to getting the idea that this is about probabilities and not certainties, and learning how to manage risk in such a way that you can get to the point where you get a stop out and still walk away from it and not think about it. Because I'm very, very focused. I had some decent money, and now long since got to the point where I'm focused on the trade and not the account. That's the key thing. I'm not thinking about the size of the stock, the money I'm leaving on the risk on the table. I'm just thinking about the trade.
The risk on the trade.
So if the trade doesn't work, I will look at it. If I've done something silly, which I do occasionally do something silly, I'm not perfect, I will learn from that. Otherwise, if I think I've met my rules, I will close that, forget that, lock that away, and move on.
Just look at the next one, isn't it? Actually interesting, just touch on the point where you say you're not perfect. How many times do you hear traders who are achieving to be, or are striving to be perfect when it's not possible? Is it? I guess you get to a point now where you still make mistakes, but they're very small, they're less catastrophic, it becomes less meaningful to your account.
The point is that you are not trying to be right. You are not going to the market and trading and trying to be right. All you're trying to do is get on the right side of the market. And if you're not on the right side of the market, you just move on. Close the trade, cut your losses short and move on. The problem is, moving on from that, is that if you're damaged by too many stop outs, then when you get a winner, a lot of people won't let that winner run. They'll cut the winner short as well. So if you're cutting losers off but not letting the runners run, you're not building your account.
Statistically, you can't.
You will ultimately blow your account.
Yeah. Okay, so you mentioned this code of trading. Was there another book or another kind of resource that really helped you improve as a trader or really switch the light bulb on in your head?
I think, again, coming back to what we first started talking about, is you've got to have adequate level of training on this. So
Yeah.
I would say it's not one book, there are several.
Yeah.
You've got to read Mark Douglas, Trading in the Zone. You've got to read the Turtles, the Wizards. But I think probably the best book, if I had to nail it for one book, it would be Tharp's book, Trading Your Way to Financial Freedom. I think the way Tharp talks about the way in which people think about the market, the way they manage risk, I think he really nailed it, and he was a big boom to cement what I'd already learned and help me refine my trading.
Yeah, interesting you say it's a psychology book as opposed to a strategy book. That's the one that really helped you grasp things.
Well, that's the business model. The business model is the same as the insurance industry.
Yeah.
The insurance company sells X amount of policies knowing that some of them will have a claim and a proportion won't.
Yeah.
And as soon as that's another sort of brick in my wall. Once you get into that, lock into that,
it's a numbers game.
You can push forward.
Yeah, that's interesting. Okay, so another question we've got here is if you could do your trading journey all over again, or if you could repeat it, and knowing what you know now, interesting question is, what would you do differently? How would you approach things differently?
I would do a wider breadth of training in the early days, and I would write a plan and thoroughly test it before I started using it.
Right.
I guess in a way my success in the early days caused a problem for me because I thought I could get away without putting the hard work in, and I could fundamental trading I did well, made money out of. Technical trading, well that's got to work, hasn't it? Jumping, too fast, not enough depth of research and testing, and then push on. I've known people who do, good traders are good. They got there because they've done hours and hours and hours of back testing. In the earlier days of technical analysis, certain traders did hundreds of hours on testing strategies.
It's commitment, isn't it?
Not just doing, spending a couple of hours on a webinar or a 2-day course or whatever. They put the hard work in, they really put the hours in.
I think that's interesting, Sarah, because new traders don't necessarily see the effort that it takes to become. What they see is the sexy part of trading of making profitable trades, but ultimately the hard work comes in behind the scenes. As you say, researching, educating, learning, improving, and that sort of thing. Do you want to pause it now? Okay, not like okay, so interesting. So now, where are you in your trading career? What are you up to now?
Okay, I set up Trade Easy Way in 2009 because I felt this gap in the market for somebody of my experience and my background to come in and really help people coming into trading and or people perhaps who have been trading before and struggling, to teach them the basics, the fundamentals, and to give them a clear way to conduct themselves in the market, to be consistent. So I'm running courses for day traders, for scalping, as well as for intra-week and swing trading in stocks and in commodities.
Okay, interesting. So you're a day trader or a scalper or a swing trader, there's something there they can look at.
Definitely. I run a trading room, but you can't, I deliberately say to people, you can't come into the trading room unless you've done the Scalp School course, otherwise you just won't know what we're doing.
No.
Once you know what we're doing, then you can just look over your shoulder. If you want to copy the trades, that's fine. And just to give you an example, we ran Scalp School a couple of weeks ago. Last week in the trading room, we had a 100% success rate.
Excellent.
So all our Scalp School graduates have not experienced a stop out yet.
Yeah.
So very pleased with that. But Scalp School has a 77% success rate.
Wow, very good.
And that's an independent study. That's not me. I haven't come up with those figures. That's 9 months of back testing says what we do in Scalper School is 77% success.
Right, so that's a good place to start if you're looking at improving, well, if you're a new trader or if you're looking to improve your day trading full stop. Anyway, I think we're done for time. Thank you very much, Mike. It's been a pleasure. Really interesting to meet you. Yeah.
See you some twice.
All right, guys, let's get started, shall we? Thanks for coming. Nice and decent crowd today. A bit different today. What we're going to do, we've got Mike here from London, is it London Way? Kent Way, something?
Yeah, I live in Kent. Spend my time in London.
So he's up here in the north, and he's going to talk to us a little bit today about election trade ideas. He's been trading since 1980.
You have to mention that.
I know, but it sounds so like it. A long time. Ex-Lloyds of London trader. I'll let you talk about what you've done and your history and stuff and go through. And at the end, we can ask some Q&A, fire some questions at him. Great opportunity to ask you some bits and pieces. So thanks for coming, and we'll leave it with you.
Well, first of all, thank you for inviting me, Mark. That's great. That's great. Nice to be here.
Welcome.
I've not got a lot of slides with you tonight, so what I wanted to do is really, try and throw this out there and get some feel about what you're doing, what you're trading, and exchange some ideas here. But first, I'll just start off by introducing myself. So I set up Trade the Easy Way in 2009. In Trade the Easy Way, I run a trading room where we scout and do intra-week trades, and I run a full membership system where we are swing trading US and UK stocks as well. So there's a couple of guys who are going to come back in here later on who are on my Scalper School course, and we ran, after they come out of Scalper School, they come in my trading room, and last week, for the first week, I ran the training room with the new Scalper School graduates. We were 100% successful. We didn't have a stop out. So, we'll see what happens, and they'll come across the stop out at some stage, no doubt, but I'll try a bit harder next time. So, I'm just going to ask you a couple of questions first of all to get a feel about what you're trading and where you're coming from, and then I'll run through the presentation and then we'll exchange some more ideas. So, first of all, can I have a show of hands who is trading just Forex? Okay, about a good third, half of you. Just stocks? Only one, okay. Can I say to you from the outset that if you want to build wealth, I think you've got to trade stocks. Alright? I make an income from Forex and indices, but I do not build wealth from Forex indices. Hopefully you'll realise why as the evening goes on. Can you now put your hands up? I want to feel for what your attitude is towards this market. Put your hands up if you think we're at now, this week, in a bull market. 1, 2.
Begrudgingly.
Are we in a bear market? Are we reversing? Guys, if you're going to trade, you've got to have commitment. Okay? You've got to decide, you've got to have a plan, you've got to go into that market, clued up, where you think that market's going and trade it. Okay? Just a little bit concerned that not much commitment coming through here, but hopefully with a warm evening up, we'll get you to engage and get some more responses out of you. Okay. One final question before I sort of just give you a little bit of instruction. Hands up if you've been trading less than a year. So more than 5 years. Only one, okay, right. Okay, end of the questions. So I'll just do a short presentation and then we'll talk around some more ideas. How do I just do that, okay.
Yeah, just
That's fine. So, what I'm going to talk to you about tonight for the next 20 minutes or so, I'm going to talk to you about a little bit, give you some ideas about how I trade and how I measure the market. Somebody once said, a very, very good, experienced US trader said in a webinar some time ago, he was talking about a particular tool that he uses, and he said in this webinar that this particular tool he thought was the code of trading. Now, I don't know about you guys, but when somebody says to me that he's got the code of trading, I'm going to listen. And I'm going to take what he says and I'm going to find out if he's right. So a lot about what I trade now is actually came from that webinar, but it's not based on what he taught. I've adapted it to me. So we'll come on to that as we come through this trading. So I'm going to talk a little bit about what's going on now and what might happen. So just to give you, just to start to introduce you to about my style of trading, it's called Trade the Easy Way because I think trading is as easy as you want it to be. I'm not saying trading is easy full stop. I'm saying trading is as easy or as hard as you want it to be. I think indicators lag. I think clean charts sing. They tell you what the market wants to do. And I think fibs predict. So when that guy talked about Coca-Cola trading, he talked about fibs. Well, I use fibs in a particular, what I think is a unique way. I don't know anybody who uses fibs in my particular way. I'm not going to go into detail now because otherwise I'll be running a course. But what we're going to be talking about is that style trading. Okay, this is a weekly chart on the pound US dollar on cable with no indicators. First of all, can anybody tell me, give me some ideas about what you're seeing in terms of the bigger picture and the way in which this cycle is operating? Can you pick up what you see in this? Just tell me what you see in the chart. Not what you think I might say, but what you see in the chart. What do you see in the chart?
Most actors indicating downtrend.
Okay. Anybody else prepared to commit?
The market is going up.
You think it might go up?
Yeah.
Okay, good. You, sir?
There's a key support level at the just device for weeks.
Okay.
It's had sort of a triple bottom just previously.
What about the general? I use the word cycle. Can anybody pick up? Look at the bigger picture. Go back. These are I've identified years. So 14, 15, 16, etc. Anything you notice about the cycle?
It's up in the beginning of the year, down in the second half
Yeah.
of the year.
So you tend to see dollar strength in the second half of the year. Okay, now that's a common theme in with the dollar and dollar cycles. We are peaking around the summer period in all of those cases. Where are we?
Hint, hint.
Okay, so forget the news, forget the election. The election is, as far as I'm concerned, it's practically irrelevant. It's not totally irrelevant, but it's not a big part of what I'm trading. I just want Mr. Market to tell me what he wants to do, that's all. Just out of interest, anybody prepared to give me a little bit of an idea about the kind of sort of tools that you use in trading? Indicators?
Fibs, trend lines,
Okay.
MACD.
Okay. If you were to fib this, what would you get from fibs? Where would you fib it for a start? Where would you fib it?
Top of the high, and bottom of the low.
Okay, I'm just in terms of months. So I can just pinpoint it on what you're saying.
So the top of the highest high,
Yeah.
and then down to the lowest low.
Are you talking about here?
Yeah.
Okay. Anybody else? Where else would you fib it, guys? Anybody?
Depends the time frame you're right.
Yeah. Okay. Good. Yeah. I would fib it from last year's high and low. If you fib it from last year's high and low, the fib is cola trading. The fib picks off the support and resistance. Okay. That's just one way in which I look at the bigger picture. But I use fibs in a different way in terms of intra-week. Yeah, but if you, I don't think I've got a fib actually. No, I haven't. Okay, just another aspect of this. This is pound. So I spelled it out. It's a 6 to 7 year box. Does anybody know what to expect from a box trade? If you've got anything, a stock, commodity of currency in a box, what do you normally expect from a box? Anybody?
Breakout.
Well, you're looking for a breakout, but you're looking for what happens after the breakout, which is to touch as resistance.
Okay. If you were in a trade or a breakout in a box like that, what would your target be? Sorry? Yeah.
Maybe the next line is support, or I don't know how long it's over or how.
Okay. There's.
Or the middle between the.
Okay. Normally, if you're in a box and you get a break, my target is the depth of the box. So if you take that box and drop it, you'll get below. If you get a box breakout, any time frame, hourly, if it's been maybe it's been a box in a week. In fact, the Dow was in a box, in a 1 hour chart, the Dow was in a box all last week, apart from Friday, and it broke. Where did it break to, anybody? In terms of an indicator? Based on what I've been talking about? Fib level. Okay? So, yeah, if you've got a box in any time frame, this happens to be a 60-centimetre box, then that breaks low. If you look at the pound CAD, pound CAD was in a much longer box, and when that broke, that really bust up. One other aspect about a box trade, if it breaks, what normally happens after the first break of the box? Any box, yeah, an hourly, daily, weekly, whatever, retest. Yeah. So you break and you get a retest, and then the target is the depth of the box. Okay, that's a weekly chart. That could be an hourly. That would work in an hourly. So you can see we're we've got a couple of excursions down here, but we're sort of still trapped within this box here, really. Hands up if you think the pound is going to go up. Down? Anybody? Okay. This is fibs on, do you remember I talked about 10 minutes ago, I talked about fibbing last year. Can you now see why I use fibs? This is the central fib zone. Here's the 50%. These are the two zones either side of 50%. So we have this enormous drop through 16, and the highs are just picking up on that lower central fib level. So if you think the pound's going to drop, where's the target? Okay. Which is, do you happen to know which fib level? Just roughly.
This is our next one, yeah.
This one here. That's 1.25.
That'll be looking for a low.
Okay. Well, the next target, I'm talking about the next target rather than a longer term target. But the next target is potentially 125. How many people are short the pound now? Anybody? Okay. What was your entry, just roughly? Are we talking about hours or days or whatever? Or how long have you been in the trade?
Days. So, after the poll came out, it showed, and then at the top of the range, it bounced twice. It was at the top of the second bounce in the range, down to the new low today.
Do you know the level it bounced at?
No.
50%.
Is it?
Okay. This is a pound yen. Anybody trade pound yen? Okay. What are you guys seeing about pound yen? You looking to short it?
Yeah, well, it's been shorted today,
Okay.
quite considerably.
Okay.
But yen's always a great, I love the yen.
Yeah.
I think maybe it's great for the trending market.
It's good volume, isn't it?
Yeah.
It's got a good daily range, that's the
Yeah.
point. Okay. So, are we under 140 today? I think we touched 950, did we touch 950 today?
Second.
A lot lower.
We had a low today.
Yeah.
Okay, alright.
Yeah.
How many people trade chart patterns?
Right, 138.94.
138.94, okay. Oh, decent, right, okay, good. How many people trade chart patterns? Anybody? 1, 2, 3, okay. Just out of interest, I haven't asked this question, but how many people do trade fibs? Show your hands if people trade fibs. Okay,
I use them a little bit more.
okay.
I don't trade just like flip, I use it, you know, as a factor of confluence and as a target, like so
Right.
it's predictive, isn't it? So,
Yeah,
Sort of other indicators.
yeah.
I tend to use it as harmonics.
Right?
Use it as harmonics.
Okay. Okay. So didn't get much of a reaction for chart patterns then. Nobody's into chart patterns. Okay. I think chart patterns are an incredibly powerful aspect of trading. If I'd had the pound yen over here, I did an interview with a big Swiss broker called Dukas Copy in 2012. And they were asking me about the yen. This is before Bank of Japan came in with the most aggressive quantitative easing ever on this planet. And they said to me, what do you think about the yen? You know, give us some projections. So I did the interview, I gave them some projections. They stuck the interview on the back of their website and didn't print my projections. All my projections pinpointed all this sort of action, but they just thought my projections were so wacky. But it was just basic fib projections, it wasn't anything scientific. But because it didn't fit their parameters, didn't fit their ideas of pound yen, they didn't publish it. Anyway. Okay, so yeah, so based on the price action we had from the election, I mean, yeah, forget the election, it's all in the charts. So, you know, the fact we're coming underneath these levels could, who knows, maybe we'll just could potentially come into 135, 130. You know, but breaking out through this pattern here and this fib support level is extremely powerful. So what might this 140 level do for us now, potentially?
The resistance
Yeah.
charge.
Yeah.
Charge, yeah.
Okay. Okay, so what we asked the question of who trades stocks, I suggested that stocks could be more potential for wealth. Can anybody suggest why I might say that? Would anybody like to contradict me? I'm very happy.
Evidence.
Sorry?
With evidence? You don't have evidence of it?
That's not an answer I expected, actually. No, because I don't really trade stocks or dividends, but I mean there is a different strategy. You know, I've got people in my training room who do that, who've got a different strategy, but I didn't expect that to say that. Did you trade stocks?
I don't trade
Okay.
stocks.
Okay, right.
You've got to be in the market with stocks.
So like 4 years.
Some of the
Yeah.
biggest trading days happen, you know, in a short time frame. So if you take the stocks out and constantly reinvest it, you've got to be in the market. Whereas 4 years, it's like you make a trade, you can either withdraw it or you can adjust your risk to account for the.
Yeah. Well, I mean, look at that pound US dollar. You know, trapped in the box for 6 or 7 years. If a stock breaks out of that, you can pick up stocks that form that pattern over a sort of 3 to 6 month period, and in many cases you would look for targets way above the depth of the box. So the potential for runners in stocks is far greater than Forex.
Yeah.
Forex, the massive dip. what's the difference between forex? In fundamental technical trading, what's the difference between stocks and forex? Anybody want to put something in?
Doesn't gap much.
Yeah. Although the reason why I'm laughing is I'm not laughing at you, I'm laughing at me because I was, in forex. One of the reasons why a lot of people trade forex in the first place is because if you do get a gap, it fills pretty quickly. Well, I was trying to short the euro to get a gap fill in the euro, and it still won't fill the gap. That's why I was laughing. Because I've had to rewrite the way I think about gaps in forex now, because I can't find a gap in the forex that's actually done that before.
Yeah.
So I think the euro's rewritten the forex gap rules. But the reason why, there are of course pitfalls. It is a different style of trading. You've got to be aware of earnings. You've got to be aware of very, very switched on to cycles in trading. Selling there and go away. It's pretty basic. But all these pullbacks, the drops that we had last week, it's just a conventional cyclical pullback. It's not. Forget Trump. Trump's irrelevant. If stocks are too expensive, what are they going to do? They're going to sell, aren't they? They're going to pull back. And this time of year, all the big banks and fund managers are looking, concentrating on their bonuses. They're not concentrating on you as investors. They're concentrating on their bonuses. So if you've got a cycle that's coming to a natural conclusion, you're going to get some. They're going to distribute their stock, and you're going to see it drop. So if you are a stock trader, this time of year, watch out for typical cyclical correction. Hands up if you trade Elliott Wave. Hands up if you understand Elliott Wave. Okay?
No, sort of. Certainly not in depth, but yeah.
The Elliott Wave, it's a very old theory. It's probably all the technical analysis techniques harder to get used to. But if you can really master just half of it, you're well on the way to understanding what's going on in these markets. You talked about a book that's out on stocks and talks about the way in which I think how stocks are manipulated. Is that right?
Yeah, but I'm looking at order flow.
Order flow. Okay.
Yeah,
Stocks, good liquid stocks, on the whole, are not manipulated. They're the market makers who are in control of the flow know how to play the game, and they know what you guys are looking for. But on the whole, they can't manipulate it. Otherwise, they wouldn't be a market maker. They wouldn't be allowed to be a market maker. But Elliott Wave goes a long, long, long way to looking at the legs that you're getting in the market. If you want to rationalise these markets and make sense of them, then you need to study Elliott Wave. Let's go back to... that's a good example. So, in Elliott Wave, it says that the first wave is the game changer. Okay? So here you've got a market that is very happy. Everybody's buying the pound yen. Everybody sees all the blue on the charts, they buy all the pullbacks, and suddenly you get 3 days where you've wiped out 2 weeks of trading. That's leg one. That's the game changer. That's the change in the psychology of that market. Alright? So what normally happens after a big sell in this environment where you've got people buying, they buy. So everybody thinks, oh great, I'm a pound yen bull. This market's going to go up, it's going to break, it's got legs, it's going to go 20,500. It's not. Elliott Wave tells you, if you're an Elliott Wave fan, you're looking for the impulse wave. This is the psychological game changer. That's the pullback. That's the move. Okay, so if you are struggling in your trading and you know, some of the things that are going on in this market don't make sense, start thinking about Elliott wave. Start thinking about the impact that Elliott wave could be having on you. So, wave 1, 2, 3, 4, 5. So I was going to ask you what happens after 5 moves, but no, you chose Elliott wave. So you said Elliott wave. What happens after 5 waves?
You
Anything?
get 3 moves.
Three.
You get 3.
Correction.
Correct.
Yes, thank you. I knew you knew it. So, what have we got? 1, 2, 3, 4, 5. 1, 2, 3. So that corrected move is over. So we're rotating back to the trend. Okay? So 1, 2, 3, 4, impulsive 5.
Elliott waves, the legs based on fib levels.
Yes.
So is it similar to cipher and back patterns?
Is it similar to?
Cipher and back patterns.
No idea.
That's what they talk about harmonics.
Yeah, I've not studied harmonics, so can't answer that.
No.
But it is based on fib levels, yes.
Okay.
It is based on fib levels.
Okay.
And so here is the opposite of the initial game changer. So this is the change in psychology of this market to the downside. This is a powerful enough move to change the psyche of the market here. So what do you get? 1, 2, 3, 4, 5. Does this start to make sense? Okay? So I would suggest that if you want to add an extra tool in your toolbox, get some more information about Elliott wave. And particularly, I mean, it doesn't matter if you trade Forex, but it works better, it works just as well, if not better, in stocks. So if you are trading Elliott wave, what wave do you want to be in on? In blue? Yeah. So you've got 1, 2, 3, and with and 3 and 3 and 5, and then on a corrective wave.
Can't remember.
Okay, don't worry. But you can see, you can start to that is not a random market to me. That is a predictive pattern in the market. So post-election, who's got a view on what to expect now in these markets? Anybody? Going to do what? Yeah. Let's have a look. So I talked about where we are in the current annual cycle. So at the moment we've got distribution patterns with fund managers and banks profit taking and creating this period of cycle, which happens to coincide with an election as well. So interest rate cycles. We've got the Fed on Wednesday, 7 p.m. So that's going to be interesting. We're going to see increasing volatility around that level. In terms of cycles, I'm thinking of another cycle which is very good. Not many of you trade US stocks, do you? Anybody know the cycle that we are in the middle of with US stocks? Anybody guess? Well, we're in I was thinking more of the presidential cycle. There are clear presidential cycles. There's a website called, I can't remember the name. If you Google cycles, there's one website. If you email Mark, I'll send Mark the email, but that shows you 20-year averages over presidential cycles, interest rate cycles, and Forex or dollar and stock sector cycles. And it's worth just spending an hour looking at it because it helps you, just a simple thing as a presidential cycle or an annual cycle that we're in now, distribution area of the annual cycle, but that has a massive impact on what I do, and I think it should have an impact on what you do. So I've already asked you about pull and bear, so we'll move on. So were you to think about getting into stocks, these are the kind of sectors I would suggest you look at the moment. I've been shorting US retailers like mad because anybody can think of a reason why it has been a good opportunity to short US retailers? Because there is that. I was thinking more of something to do with technology. Yeah, it's the sort of Amazon effect. The reason why the US retailers are very, very exposed is because they spent years and years and years building massive out-of-town retail centres, and they are becoming ghost towns because they are pulling out very, very rapid rates. And we've seen some fantastic charts in stocks in US retailers. Really, just as we've seen Amazon and Facebook and Shopify go one way, we've seen the traditional Sears, Macy's offer some great shorts. And I've been selling Macy's for 18 months, 2 years in a bull market. So a great example of how to be a bear raider on a particular technology cycle that's out there. Utilities, why would you short? I'm thinking of UK utilities. Anybody suggest why that might be good?
Talk price caps.
Yeah. Yeah, it's a political shift, isn't it? Political influence. House builders?
Again, political help to buy schemes and things like
Yeah. House builders have been doing really well.
that. Yeah.
Pretty good trending stocks on Persimmon, Wimpy. They've been putting in some good performances. This is M&S on a fib in a daily chart. Anybody trading it? Would anybody endeavour to trade M&S? For any technical reasons? Forget it's M&S. There's a technical chart. How would you trade it?
It's choppy. It's choppy to me.
Yeah, it's choppy.
Yeah. I try and stay away from shopping.
Okay. If I forced you to trade it, got you by the nuts.
I'm trying. Fundamentals is not my strongest point.
I'm talking about technicals.
Oh, right, okay. I mean, looking at that, I'd wait for the next highest high and then maybe go from there.
Anybody?
Bounce up the trend line.
Yeah.
Wait now.
Yeah. What, sorry, long or short?
Long.
Long, okay.
So another test.
Anybody else?
Wait till the next big level down.
Yeah. I
It's a small stock.
would short it and I would look for gap fill. I'd try and short gap fill, or at least part gap fill. You've got a gap here. I would look. It's on this chart. It looks like it's trying to come off. This is 50%. Looks like it's trying to come off the 50%. I would look to get position on at least a partial gap fill, if not a total gap fill. It's just a trading idea. If it doesn't fit in your trade plan, don't touch it. Okay, I started asking about chart patterns before, and nobody seems to sort of take me up on chart patterns, but can anybody think of a good way to chart? What do you think might happen? We're all here trying to predict the markets, aren't we? That's our game. You're traders, we're looking to use technical analysis to predict this market. If you were forced to trade that market, if I locked you in a room and said you can't come out of that room until you've traded that chart, what would you do?
Wait for it to hit that resistance line and then short it.
Yeah. So would I.
Yeah.
And if you came out of that apex, that could be a very, very handsome trade. Very handsome trade.
How far down do you go? What would be
What for a target?
Yeah. Or would you put them?
Where would you set the target? I'm doing all work here.
The next line of double support there. So where it's, I can't see the number on the right hand side. It's a sort of support line.
Yeah.
You know,
Right, you might pick on, these are decent lows here, aren't they? So you might want to-
yeah, a third of the way where November, December is probably a little bit to there.
Yeah. Okay.
Would you not be looking, because of the way that's going, would you not be looking for a breakout long?
Good question. I like that question. Yeah. If that closed above 250, yeah. That could break up.
I'd go longer.
Where?
I've been looking for a breakout going long on that.
Okay.
The way that's going,
Yeah.
Wipe the tops, take the stops and burn them down.
I think the safest way.
I mean, I'd probably sit and wait for it maybe to go either
Yeah.
way, but that, I'm probably looking 50% one, it's going to break upwards.
Good. Committed traders, what I like to hear.
Which is a short interesting situation like that, you look at a short squeeze that breaks to the upside.
Yeah.
I mean, it depends on the time frame on that, but
Yeah.
Yeah.
That's a David chart.
they're definitely I'm going long.
Okay. Well, okay, fine. Yeah, you've got a true nice support. I think for me, whatever happens in there
It's critical though.
is going to be. It's
So
gonna
what's
be-
the Elliott base tells you?
What's the Elliott wave?
It's not really an Elliott.
Can't see. No.
Good question.
What cycle is that?
1, 2, 3, 4, 5. 1, 2, 3. 1, 2, 3, 4, 5. Here, it's just, once we get over this, you can see it gets smaller bars.
Decelerate.
So, it's potentially,
That's building to something, isn't it?
So
it's
can
building
you,
for something.
can you zoom into a smaller time frame and then tell what's the Elliott waves?
You could, but I can't do that here and now.
Yeah,
But you could, yes.
but are you not going to come out with different pattern, the different waves, and then
I
when
think-
you're back again, it's just like say, oh no.
I
Because I
think-
heard about these waves
yeah.
and people say they cross it.
You could do that. I mean, you do have anyway patterns within bigger time frames. So you could, yeah, that is a good point. That is a justifiable point. I think the issue is we appear to have quite a lot of low volume moves here. I mean, the fact we've swept down here at the moment, we're holding that trend line. That could bode, yeah, as you say, very, very well. If that trend line holds, that could punch up through 250, come back and retest 250 and be 3,000 no time, I don't know. Yeah.
I will put a line just underneath those where it's go with the tails, along the tails. There's strong support, strong support.
Yeah. You're right. That could be.
Could be
That
break.
breaks the upside. That could go very, very well. Yeah. And we've seen some significant pushes here. The buyers have been coming in on these dips here throughout 16 and 17.
It's resisted very strongly though, over the three tops.
Yeah. It's reached. That's a big fire. That 250 is a big fire line.
Yeah.
It's a big fire line. So that could be a very interesting stop. So next, right? Anybody want to give me some analysis on next? Is it hands up if you would avoid this at all cost? Is this the kind of chart that you would not trade? Okay. So, if you were to trade it, anybody gonna give me an idea how you might trade it? Anybody? Okay. Where are you shorting
It's hitting them, it's holding, it's hitting them.
Yeah. It's interesting what happened here, guys. I mean, here you have a five-way pattern to the downside. We close the gap and drop back down here. So you could look for potential gap fill and the next leg down to some of these target levels. Just an idea.
Actually, Mike, just go back.
Yeah.
Did that fill that gap at this point? Yeah, it did, didn't it? Interesting. It does just fill that.
Yeah, yes, it does.
And then
Yes.
that's filled, and then we've only got one unfilled, so it depends
So
on
it
what you're
does.
thinking. Yeah.
It does
Well,
tend to fill and then rotate back to the trend. This is a common thing. When something less experienced traders see something drop, and I used to do it myself, you automatically think, wow, that's dropped to a price, maybe it's time to buy. But if you are a trend trader, you just wait for it to rotate back to the trend, unless you've got a very, very strong, powerful reversal signal. And yeah, I think buyers down here did okay. It obviously held this level for quite a period, good 2-3 months. And cyclically, and in terms of cycles, what could you tell me about the reversal pattern down here? Anybody? In terms of, I'm not talking about charts, I'm talking about cycles. Back to earlier point I made about cycles. When did it reverse?
Time of year.
Yeah, the best time to trade stocks is November to April. And this is after Christmas, when the US market tends to level out and bottom out and go up. Anybody know why the US market drops around Christmas? And it's not because they're all having turkey and in front of the fire. There is a technical reason why a lot of stocks suffer in the US back end of the year. Anybody? Remember? Tax. They have to fill out their IR35s in December. So there is a Christmas trade where us Brits can pick up on the US guys selling and filling out the tax forms, and then picking up a support, if you get a support signal, in January, February. Okay? So it's these little nuggets of information you can use to think about it. But my message to you is, overall, summing up what I've tried to go through today, is have a good look at the cycles in these markets. If you're a currency trader, look for dollar strength in the second half of the year. If you're a stock trader, look for the Thanksgiving into Christmas rally, Christmas sell-off, and the January-February next wave. If you are looking at presidential cycle, look for second and third year when most of the electorate start to get really fed up of presidents not delivering, and they start to distribute, and you see stock, you see distribution pattern in the second and third year of the cycle, and then they normally start to pick it up as you get into the next election process. Mark, that's all I was going to talk about in terms of charts and markets. So I'm obviously open to questions, but otherwise we're going to pick up on.
Yeah, okay. Now think about your questions, guys. We've got a few that have been emailed in. I'll start off with those, and while we're asking those, we'll go around and see if there's anything happening. That's really interesting, actually, cycles. Thank you for that. I think it's something that we don't tend to look at, but it makes a lot of sense. It makes a lot of sense. And the logic behind why the cycle's happening, like the IR35 thing, is just is knowledge.
Yeah, I think I always find that adults always want to rationalise markets. I've seen teenagers being taught how to trade markets, and they will stick to it. You can lay out a trade setup, give it to a teenager, they will sit there and trade it. I saw a video of a girl playing solitaire or something online. She had alerts set. It was a trader, a coach and mentor in the US who I think he got his niece in during the summer, and did an experiment, just taught her how to trade. And she thought trading was really boring. She thought it was, she could be outside playing with her mates or going around to the shopping mall or something. She thought trading was really, really dull. So she sat there playing solitaire, set alerts on the charts, And there's videos of her just taking trades, going back to solitaire, setting the exits, going back to solitaire or whatever, and making very several $1,000s over a couple of weeks trading. As adults, I can see it day in, day out. Adults always want to rationalise something. They always want to look to buy something that's dropped hard. They always want to think themselves out of a trade or talk themselves into a trade that they shouldn't be talking themselves into. For example, this guy in my trading room, he went on a beginner's course for me about 5 or 6 years ago. He's actually a very good trader, but he got hooked up on the OPEC meeting. On the 25th of May, OPEC met, and he thought, right, that's it, oil's going to fly. What do OPEC want? OPEC want a higher oil price. He's an options trader, so he sold lots of puts. In other words, he was bullish on oil stocks, and within 2-3 days he lost £4,000. All because he was locked into the idea that oil was going to go up. He got totally into the idea that OPEC were going to save the price of oil. I was the opposite. I wasn't touching it. I started buying it just under 46 last Friday, just scalping it. I'm not looking for a reversal yet. Anyway, but just to make the point that as adults, if you are a technical trader, if you call yourself a technical trader, then trade the technicals. Trade them. If you're struggling, stop what you're doing and go back and study in maybe some of these areas that I picked up on tonight. Up to you.
Yeah, makes sense. So it's a bit of an insight into the strategy now. How do you get started? How do we start out really? That's something you all know about really.
Well, as a coach and mentor, I'm going to say training, aren't I?
Yeah.
But I would just make the analogy.
How did you get started?
Oh, when did I get started?
Oh, right, okay. Now you must have.
Yeah, way back in the beginning, before all the sort of chart packages that you've got now, I was a fundamental trader. I traded on fundamentals, and I got a taste for trading from some of the early 1980s IPOs because I'm an old geezer. I did things like I got a whisper that TSB would go private, so I opened a TSB account early enough to get preferential treatment in the IPO, and sold my TSB shares within a few days. I traded BT when BT was privatised. I hung on to BT for about 2 or 3 months. I still talk to guys now who bought BT in the 80s and are still sitting on BT shares. Well, forget it. I was out. My aim is not to get out at the top, but I did pretty much get out at that particular period, high in that period. That's not the name of the game to try and nail the high, but I got a good profit. That's all I was concerned about. And that's how I started trading. So in the meantime, I was a young kid trying to save for my future. So I started. I used an IFA, independent financial advisor. He told me to buy these unit trusts. And I looked at the results 6-12 months down the line and thought, this is pathetic. They're taking all these fees out of me and I'm getting these stupid 3, 4, 5, maybe 8% if I'm lucky. So I thought I can do better than this. So I started to just have a simple value strategy in stocks. So I would buy stocks at the right time, when they were low, when they looked cheap. I would sell them when they looked expensive. Nothing more complicated, nothing more sinister or sophisticated than that. I just bought low, sold high. I started my working life in the market. That's what I did in the market. That's what I did in my own account. So I sold 80% of my share portfolio 2 hours before the September 1987 US trade balance came out, and the rest is history. It triggered a free fall. Why did I get out? It was September, October. Markets were very high. I just couldn't see these stocks going any higher. They just looked ridiculous price to me, so I just sold them. I didn't predict the high. I didn't predict the fall in the market. I just sold at a profit. That's all. I did the same with .coms. I sold most 80-90% of my .coms in February 2000. I was going to meetings. I actually had some clients who were .coms. I was going to meetings and they were sitting there having secretaries were having cups of coffee talking about how many thousands they made on stocks. And I thought, this is ridiculous. This is ridiculous. You know, these guys are holding all this stock. It's going through the roof, and they don't know what they're doing with it. And the PE ratios were just mind blowing. So I just sold it. You know, I didn't foresee a major dot-com crash. So I just sold it.
Did you then start shorting things, or how did you transition strategy?
No, I didn't. Because I thought if something can go up that high and the market's that mad, I don't want to get on the wrong side of that. That's like trying to jump in front of a train.
Yeah.
I didn't want to short that. I just wanted to get my profit, manage it. I did keep some dot-coms that had intellectual property. I thought I was being a smart ass, and I was selecting and being selective and keeping some internet stocks that had some real asset value rather than imaginary paper value.
Yeah.
If they had a system or software or something that looked to me as if it, like Shopify has or Amazon, then I kept it, and made some losses on those.
Yeah.
And I had a stock that went to zero. I bought in an IPO. It was called Stepping Stones, I think. They thought they produced a prospectus saying they were going to be the HR portal of the world, and they went to nothing.
Yeah.
So I lost 700 quid
Yeah.
in that stock, but I made more than I lost.
So that was, you were doing a lot of buy and hold and front running IPOs for that era. It all went pear-shaped, the market
Yeah.
came down. What did you start doing then? Did you start...
Well, because at that period I wasn't a particularly sophisticated trader, I just backed off for a period. And then when I saw everything appeared to me to be settling down and the next cycle coming up, then I started to come back in the market.
At what point did you sort of transition to historical and more technical?
So I started studying technicals in the early 2000s, and then
So after we had the .com and then
Yeah.
it was... Yeah.
so I paid for a very, very expensive weekend course, which actually confused me. I came off this, it was a solid 2-day course in a packed hall. I paid a lot of money for this. And I walked away and realised quite soon afterwards that I didn't understand technicals fully, and I was actually quite confused. And so about 3 or 4 months later, I went away on a holiday, and I took with me a book by a guy called Elder. I think it was called Come Into My Trading Room or something.
Yeah, I remember that.
And I think I was down in the south of France, near Brigny, a village called Brignon. Anyway, it was a lovely holiday, but I sat by the pool just reading Elder, and suddenly it began to make sense, and what Elder was saying made sense, whereas the course didn't. And so I did more training, started to trade some technicals, wasn't working out for me, so I had some US mentors as well, and then finally I developed a trading plan that started to work for me, that made sense to me, I could rationalise it, I could use it, and then I started to build my position and grow my account. I traded in the 05 to 07 period. I traded futures in oil and futures in beans. I don't know if any of you may not know this, but in the Chicago exchange, if the beans go to a certain level when the market's open, they close the markets, they shut it. Trading, you cannot touch your futures contracts. And there was one period in beans where it's called limit up or limit down. If there's a 70-cent move in that, the beans used to trade in a very short window. It used to open, I can't remember the times now. I think it used to open about 3 o'clock and close at 7:15 UK time. So if the markets went limit, as in this case, the markets went limit up within a few minutes of the open, if you were on the wrong side of that, you were completely stuffed. If you were short in that market and that market went limit up, you couldn't do anything.
You can't get out, right?
You can't get out. You can ring the exchange, but they'll just laugh at you and have a little chuckle with their mates and put the phone down. You know, you're in that trade. That's it. And the beans went limit up for 3 days in a row. They opened the next day, bang, they shut. Open the next day, bang, they shut. So for 3 days, the beans went limit up. So if you're on the right side of it, you made a shed load of money. If you're on the wrong side of it, you must be crying buckets of tears. So my point is that I've been around the block. You know, I've traded futures, spread betting, of course buying the underlying asset in my zip. Been there and done. The only thing I'm weak on is options, and that's something I would look to do in the future, in the near future. That's the only thing I'm weak on.
Okay, good. Right, another one. This is a big old question we get all the time, of course, and everyone wants to know it. What's your biggest challenge to getting consistently profitable? You've been trading a while. What's your biggest, maybe your top 5 tips of becoming consistently profitable?
What tips for becoming consistent? I see so many people, you know, I train people, I mentor them, or they come on a course or whatever, and still they go away and they don't write a trading plan. My trading plan is on one side of A4 sheet. For my day trading, it's on one side of an A4 sheet. It's just got 3-4 paragraphs on it. It's very simple, and it's got very specific sets of rules to conduct. For me to conduct myself in that market. And if for any reason I am not on that page, then I have to stop trading. So you've got to have a trade plan and you'll stick to it. You've got to find a method of trading that suits you. It's not about, there's no holy grail, as you've probably already discovered. What it is about, I think it's about the different ways of trading. There are completely different ways of trading. And as long as that, whatever that trade plan is, as long as that trade plan makes money, it doesn't matter whether I agree with it or not. If it's making money, it works, therefore it's viable. And so it's about finding a system that suits your lifestyle, your account size, and your goals. Secondly, something that's really, really basic is a lot of people go in a trade and they don't actually have an exit strategy. They don't know where they want to get out. They spend all that time studying that chart and thinking about why they're in that trade and why they're taking that trade. They haven't given it a second, or they haven't given enough thought to where they think it's going to go to, and where they think where they should get out. If you talk to brokers about typical mistakes that less experienced traders make, they'll tell you less experienced traders always leave too much money on the table and they give it back. Always. It's good. It's one of the most common mistakes, and brokers love it. Because then you get less experienced traders do revenge trading, they lose their account, the account dwindles, they put more money in it, etc.
Commissions, you've got law.
They love it, they love it.
So we've got some of you guys here, some guys have probably been doing less than a year. If you could start your career again, what would you do differently?
It has to be, you have to have an adequate high level of training. You wouldn't ask a lawyer to do conveyancing for you if they haven't done 7 years training. You wouldn't ask an accountant to audit your accounts if they've done 7 years trading. Why would you trade with 6 hours on a webinar or something? It's just not possible. I've never met anybody who's done a few hours on a freebie webinar or a freebie YouTube video or whatever who can make a profit out of trading. You just can't do it. It's a profession. You have to understand the business model, and you have to train hard. You know, I put hundreds of hours, thousands of hours into this. What you're seeing is the experience of years of trading, not a weekend, not reading the Elder's book. It's reading 6 books, 10 books, hundreds of hours in front of the screen, testing, trade plans. There's no shortcuts. There is no shortcuts. I don't care what anybody says, there's no shortcuts.
Yeah, it's the same. Whenever you speak to any professional trader who's been in it a long time, it's the work behind the scenes, isn't it? It's not the clicking the mouse and the sexy stuff, it's the grind, the books, the studying. Right, okay, let's move to some more strategic stuff. I have 2 questions really, guys, because we've got about 20 minutes or so, so let's go to some more strategic stuff. Do you normally trade the news?
Yes, not all the time. I have, I will happily just close the account and walk away if I don't like what I'm seeing, but I do have a method of trading the news. It varies depending on whether we've got a very violent high frequency move that's over 70 pips or over 100 pips. I will either leave it or wait for a certain pattern. If it's 35 to 70 pip move, then again I will look for normally the direction that comes out of that move. Not try and jump in and second guess what they're going to do with it. You know, if it's left, it's 50 pips. I certainly would not chase the market. No way would I chase the market and try and look for a breakout. But I would certainly give it time.
So you still think technical analysis works in times of news?
Yeah, I do. There are more and more events where I'm not trading it. Yeah,
Just sitting out.
the market, the banks are sitting there with algorithms. It's not people pressing buttons, they're algorithms. So I'm not going to fight an algorithm. But I will participate in a market where I think I can manage my risk and potentially get the move that's going to come out of that news.
Yeah, okay.
I've been in certain trades, particularly Fed days, where I've had 1,000 pips or more on the outcome of a news trade, not by getting in the news trade,
Yeah.
on the outcome.
So on the subject of news, actually, we've got the elections, we've had the elections. How do you think the market's behaving? Is it behaving because of the election, or are we in a bigger cycle? And what impact has the election got on your future decision making, if any?
I think that we've seen the pound, but the pound is not holding support levels. We're breaking key numbers. We've seen the pound yen happily going to 140. So I will continue to short the pound until it stops working. So it's too early. I'm not going to predict the pound's dead. I'm just going to trade what I see and just let the markets play out. But it is cyclically, as I've said, the time of the year for the pound to weaken anyway.
Does that mean you tell the guys in your trading room, you say, listen, wait for the opportunities, wait for
That's
the
what
right
I'm saying in the room, yeah. That's what I'm saying in my analysis, in my videos, my daily videos, yeah.
Yeah, okay. Right guys, any more questions? Okay, well, final one before we write. Are you really willing to make any market predictions? Who said this one? Who said this one? Any predictions?
At some stage we will get a decent correction in the indices. I think the indices are expensive. There's stocks. You know, if Facebook can come off, Apple can come off, it is showing. The market's telling me that stocks are very expensive and retracements are already underway. So I would look for some deeper retracements and some closer to. I met a trader today and he was predicting that in his head he was saying that the market's going to go back to the November 9th levels and pre-November 9th levels. I think I would agree with him in part, and I would agree with him in full if I get certain price action. But we are definitely seeing a market that is very, very expensive, and it's already showing its willingness to retrace.
Okay, I'll just got a quick question for you, I'll do one, sorry. If you think that's going to happen, would you be pressing the retail short harder? Thinking they're going to get deeper with the impact of the market?
Certain retailers that are, particularly in the US, with this issue I've talked about in the US, definitely.
There's not a double impact on the
Yeah, I've been a bear rater on US retail stocks.
Bernard.
Right, two quick questions. The first, when Mark was saying before, a lot of people do think trading is quite sexy in that sense, obviously, Wolf of Wall Street type stuff.
But it means not.
But obviously, you're saying you studied thousands of hours and years and years and years. Do you still find it interesting?
Yeah.
Is it still as interesting, I suppose?
Yeah, it's the name of the game is predicting the market. So, I do get upset if I predict it and my predictions don't come true. I'll be honest with you. I'm a human being. If I get the wrong side of the chart in the market and it doesn't work out, I'm affected, but I have mechanisms for handling that. and you know, a trade plan that protects my account. Yeah, but you know, I spend a lot of time and a lot of effort refining and looking to really look for these waves, these cycles, and these. Yeah, I'm looking for good impulsive moves, and so yeah, I still love trading. Yeah, I definitely love trading.
That might lead you on to a good second question then, which is, in terms of an impulsive move, Bitcoin's dropped 17% today.
That's it.
That's it. Yeah, this is like really landing on, you know. Bitcoin's dropped 17% today. But you see that going next?
Yeah, Bitcoin is just an amazing chart. The last time I saw a chart like that was beans and oil in 06, 07. And once the market comes off, once the signal in that is sent out, you will generally get the follow through. So I would look to, you know, if you've got something coming off, I would look for I would try and get in on a retracement. So I would, as far as I'm concerned, anyway, the psychology of that market has changed, and I would just be patient and look for a retracement at a certain level before I risk my capital.
Thank you. All right, guys, we've got a few minutes for questions. Anyone got any duties?
Can I just ask, do you do a trading course?
Yeah, I've got some sheets here. If you want to pass them around. This is just one aspect of what I teach. This is Scalper School, where I'm teaching day trading. But if you go on the website, you'll see I do what's called booster mentorships. When people have been trading for a while and want support in looking at what they're doing and trying to build their trade plan up to go to the next level. So there's scalping, boost membership, and stock trading courses, a stock trading course. Okay, but this specific one is Scalper School. You've got sheets. Okay, I'll print some more.
If anyone's interested, you can send me this stuff.
Yeah.
Put it out, I'll send it out.
If you email Mark, he'll give you a link.
Just a quick one. You mentioned it's right at the start that Forex is more income based and it's difficult to build wealth through Forex trading. What makes you think that? Because obviously there's significant successful Forex trading.
Yeah, it is possible. It is possible to build an account on Forex alone. Just trading the euro and pound alone. You can build an account doing that. What I'm saying is, if you want to really compound it and get some better growth projections, I think you need to expose that account to other assets.
Yeah.
That's my message.
Yeah.
I'm not trying to say, I would never say don't trade Forex, because Forex is great because you have natural, anyway it's really, really good for Forex because you have natural reversals and cycles in Forex. That's why so many traders trade it. But if you want real exposure to potential breaking markets, then I would suggest you need to look to other asset classes in your account.
Anyone else?
Yeah. Now, with regards to trading stocks, now my biggest problem is how you scan for stocks to trade it everywhere on a particular day.
How do I scan?
Yes.
That's quite a detailed question because it depends on where we are in the cycle. For example, if we were running, if I was talking to you in September, October, and the markets were healthy, I'd be looking to buy into the Christmas rally. But after Thanksgiving, you tend to see. I trade a lot of US stocks, so after Thanksgiving, you would tend to see a buying cycle. Have a Christmas rally, profit taking before they fill out the IR35s. And then retracements into the early part of the year. So as we you and I are talking now, I'm taking profits and even looking to short certain sectors. But as for scanning stocks, like I said, it depends on. I'm looking for high price stocks. If I think the markets are distributing and there's got an opportunity to short and indices are coming off, etc., then I would look for expensive stocks. But I would look for weak stocks in weak markets, or the weak stocks in strong markets. Chart patterns that suggest to me that already some traders are already bailing out, and all we're getting is retracements ready for the next rotation back to the trend. So, but to answer that fully, obviously I'm going to give you spend much more time talking about that. Do you trade UK or US stocks?
Yes.
US. There's a website called finviz.com, FINVIZ.
It's a good site, though, yeah.
That's a really, really good site. Great scanning, free scanning tools. It lets you drill down into sectors and lets you set certain parameters, which I like.
In regards to your strategy, you say you flip it from Forex to stocks, and did you change slightly things for each one, or is it just first time?
I do have different trade plans for stocks and Forex, definitely, yeah, because they operate differently. You have natural cycles and reversals in Forex, whereas stocks, I'm looking for some other chart patterns and breakouts.
So you're back testing a lot of them all the time.
And like I said, the guy who back tested my scalper school system, I didn't even know he was back. He produced. He's an engineer by trade. He's trading full time now. And he came on scalper school 6 months ago, and he had been a trader for quite a while. He's one of these guys that had grown an account very, very quickly to quite a sizable size, a good six-figure sum, and given most of it back. And then came on scalper school, and he just totally got what I was doing. Loved it so much. He back tested it 9 months, from April this year back 9 months, and then gave me the results and said this strategy is 77% successful with 8% no trades and 13% stop outs. Okay, that's not me. That's him. That's him.
All right, guys, we've got probably time for one more, but we're going to go to the bar and go on.
Yes.
Final question.
You can certainly buy me a drink of wine.
Last question, then, guys, before we get to have anybody got a question? I think
What effect do you think that the growth of retail traders will have on the market? Do you think we'll start seeing
Nothing.
more?
Nothing.
No.
We're nothing in the market. We're a pinprick. We're barely a pinprick.
Do you know what percentage it is?
No, it's small.
Yeah.
I have actually got some stats on that.
Oh, have you?
Big one, yeah.
Okay.
I've done a bit of research for a business plan.
Who invited in?
all right, thanks so much. Yeah, appreciate that. Cheers. Yeah, guys, we'll be next door or a couple of minutes down the bar. Come and join us there. If not, send me an email if you want to find out more, or we'll see you a couple of months, a couple of weeks time, 4 weeks time. Cheers, mate.